Il mio nome è Riccardo Dalfiume, io sono Director Global Client Coverage e quindi insieme al resto del team sono responsabile dello sviluppo commerciale in Italia del gruppo RBC e in particolar modo della divisione Investor Treasury Services. Prima di iniziare i lavori e di introdurre i nostri ospiti, permettetemi di spendere due parole sul gruppo RBC, Royal Bank of Canada, che è la prima banca in Canada, è tra le 10 più grandi e solide banche al mondo, con circa 150 miliardi di dollari di capitalizzazione di mercato, un utile di 12 miliardi di dollari canadesi e un ROE del 17%. Il gruppo RBC è strutturato in 5 linee di business, 2 delle quali sono prevalentemente canadesi, e quindi la parte insurance e la parte commercial banking, le altre 3. Oggi ne vedete qui rappresentate 2, le altre 3 sono invece più a respiro internazionale, e quindi tutta la parte capital market, la parte di wealth management e la parte di investor and treasury services. La divisione di global asset management fa parte della linea di business del wealth management, oggi gestisce circa 300 miliardi di dollari a livello globale. Una parte di questi 300 miliardi di dollari sono circa 60 per Blue Bay, che è una realtà al 100% posseduta dal gruppo RBC e che probabilmente forse è più familiare e conosciuta a livello europeo. Per quello che riguarda la divisione Investor and Treasury Services, che io rappresento, è tra le prime 10 global custodian al mondo, quindi i servizi sono quelli di custodia, deposito titoli e amministrazione. È una realtà che oggi conta circa 5.000 persone a livello internazionale, quindi a livello europeo, nordamericano, Asia e Pacifico. Abbiamo circa 4.000 miliardi di dollari canadesi in patrimonio amministrato. Per quello che riguarda l'Italia, la nostra presenza oggi è attiva da circa 15 anni, abbiamo 100 persone qui a Milano e l'attività è un'attività di supporto a tutti gli asset manager italiani per quello che riguarda il servizio su fondi di diritto italiano o su fondi di diritto irlandese e lussemburghese, che come sapete oggi contano circa 2/3 del patrimonio gestito in Italia. Now let me switch into English so that I can introduce our guest. We got Simon Gregory, Managing Director Global Equities of RBC Global Asset Management. And we got Frank Talsma, who is responsible for product development of risk and investment analytics services within I&TS. Let me give a brief kickoff, just saying that the evolution of the fund industry continues. We got an increasing number of investors placing their money within asset managers. So this is clearly the primary goal of an asset manager. But now we think that the industry should try and start to consider how it will look like in the next 5, 10, or 20 years. If we look at the past 10 years, I would say that much has been achieved. We got an increasing number of new regulations. I'm thinking about AFMD, I'm thinking about any enhancement within UCITS directive, GDPR, MiFID II, which gave additional security, I would say, and transparency towards final investors. Over the last few years, we have also seen a great number of new entrants within the asset management industry. I'm thinking about fintech companies as an example. These companies have been considered initially as a competitor. I would say that now are more a partner that we should and we could collaborate with in order to increase or to reassess our global value proposition. It is now time to consider the wider client experience and try to understand how data and new technologies can, I would say, give advantage, give benefit to the asset management industry. If we compare asset management industry with other segments within financial services, let's think about commercial retail banking. I would say that within commercial banking, there are much more practices linked to technology and data which are widely accepted and somehow promoted by final customers. I'm thinking about instant payment, for example, mobile banking, but also biometric technology for securities. So probably the asset management industry should make sense about all the new data and technology which are available for the industry, try to understand how to implement this new technology in order to create value. Of course, when we talk about data and technology, it is crucial to understand that we are talking about an investment, a continuous investment within data and new technologies in order to differentiate from competitors, but also to create value. So today, thanks to the contribution from Simon and Frank, we're trying to identify the challenges and opportunities from a dual perspective, being the asset management industry and also the asset services industry, here represented by RBC Global Asset Management and RBC Investor Treasury Services. So Frank, if you do agree, I would start with you. The first question is more on data strategy. There is now a great debate about data strategy, but concretely speaking, where are we with data strategies?
Thank you, Riccardo. Thank you for the introduction. I cannot agree more with everything that you've said. And I think the question you raise is a very valid one. Where are we now? But just before I go into that, I just wanted to say that I'm really happy to be here today, and thanks for inviting me. And it's a great experience to be at such a conference. I'm impressed with the size of this conference and everything that I've seen here. So I know you've had a full day. It's 6 p.m. now, right? So it's not the best slot to talk about exciting things, because you've heard a lot of things already throughout the day. And I know I've just seen that they're starting to serve Prosecco outside, so not ideal. I know you want to go soon also to have your drinks and your food. So I think we're going to have a nice session now and just really take you on a journey and explain a little bit how things are, how we are looking at things at RBC. And as Riccardo has said, it's all about data and what we call the advanced data experience, and about focusing on our clients and focusing on helping them to use data as a strategic asset and to see the value and unlock the value of data to help transform business models and to drive digital transformation. So I think that this is some of the key things here. And I would say at RBC, so Riccardo introduced me, so I've been about 12 or nearly 13 years now with RBC, and most of my career I've been working very close to the topic of data and analytics. It's something that's very exciting and very fast moving currently, and everybody's talking about it. So it's a very, very exciting area to be in. And certainly over the last, let's say, 4 to 5 years at RBC, there's been a real investment in this area. So I come more from, let's say, the classical investment analytics, risk analysis world, which is, of course, a very data-intensive world. We all know we need to calculate performance, we need to do attribution analysis, we need to look at risk-adjusted returns. There's a whole discipline around this. And the skill sets that these people that are doing these kind of functions are very, very valuable to do more advanced things. We're talking about advanced analytics. So we'll be looking at some of the use cases and some of the ways that we're working with our clients in these particular areas. But before I start, just a quick question to the audience. Are there any data scientists in this room? If you're a data scientist, raise your hand. Okay. 2. Okay. That's not bad. The question I'm asking myself is, if I come back in 5 years from now, will there be more hands that will go up, right? And I hope, and I'm convinced it will be, because this is, I think, one of the key things in our industry is that we see kind of a shift in terms of talent, in terms of skills that are required to make sense of it all and to make sure that we can remain relevant and remain competitive going forward. So this reminds me also of a conversation I've recently had with one of our senior data scientists. I sat together with him and he told me, you need more people like me. You need to clone me and put me into all your business segments so that I can help you to drive transformation. So I was thinking, like, he's probably right, but I'm not going to tell him that because I'm going to boost his ego too much, right? But he's probably right. We need different kinds of people. We need young, new talent that is able to use technology and able to challenge the status quo and think outside of the box. And this talent is very hard to get by. It's a challenge. We're competing with the large tech companies like Amazon, Google, for that kind of talent. So I think that's something that will resonate throughout, let's say, the discussion we'll be having is access to talent, not only technology and data, but also the talent. So there are a couple of slides. I'm just going to take one slide just to kind of set the scene, and I'm just going to fast forward through Simon's slide, but this slide here, and it's a very busy slide, so don't read through it. The idea here is just, it's intentionally busy because there's lots going on in the world, right? There's lots going on in this environment. We can see disruption happening in many sectors, and I think when we're looking at the funds industry, we really need to look at what's happening across the globe in other sectors as well. And I think I just wanted to talk a little bit first about the macro trends that are driving everything that's happening. And you know most of this, right? So nothing new here, but just a couple of ones that I wanted to highlight. First one is the demographics. For me, the demographics is kind of the master trend that rules them all. You can see it like that. Because we are looking at how can we service the long-term needs of our population. And I think, interestingly, and you all know this, right? So we're all getting older, right? We need to save more, and we know that there's not enough babies being born. There are not all people that can fill the retirement gap. It's a huge problem. At the same time, what we can see, and I think this is an interesting thing we can talk about, is the generational thinking. So the younger generations, the millennials and even younger generations, they're not interested in finance, basically. We're not capturing their interest via telling them, go to your financial advisor and buy yourself a fund, and it will take you 3 days to invest into that, and here's information in a fact sheet which is like at least 1 month old. So young people need to be able to have a different experience. They want to go, there need to be a marketplace or an online app, something that is really easy to use in order to be able to capture that market segment, which is very important because the millennials, they will inherit all the wealth of the current baby boom generations, right? So they are the future investors. We need to make sure we tap into them. So for me, that's a very important driver. Then I would say, you got the low return environment, increased volatility. So I think, there's of course the debate active versus passive. And I would say the bar for active managers, and I think Simon, you're an active manager, you will discuss about that. The bar has never been higher than it is now. It's basically there are 3 priorities. It's performance, 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 basically, in this environment. We all know that with the passive funds, where they're basically, some of the studies have shown that on a net of fees basis, they're outperforming active management. So it's about demonstrating alpha, it's about showing value for money. So it's a very, very challenging environment. And on top of that, you've got all the regulatory change. But I would say from a regulatory perspective, what we see in the asset management world is that most firms have been focusing on being regulatory compliant. There's been so much going on, and it's still an ongoing theme. So, and we can think about now about things like data protection, which is hugely important. But I would challenge a little bit in saying that with all these regulations, which have been at the top of everybody's agenda for years, for decades, probably we've been losing a little bit of sight in terms of innovating and offering more value for money. So that kind of a challenge, I would say, that is particularly relevant to the asset management space. And what we can see is that, and certainly when I go out and meet clients globally, there are the same challenges that clients have. Whether I go to Canada and speak to a Canadian pension fund, or whether I speak to a Luxembourg UCITS fund, or whether, for example, I speak to an Australian domestic asset manager, they all have similar challenges. They all know that they must transform, there must be digital transformation, and they know that they must do something with data. Data is at the heart of all of this, so it's about data transformation. And this is what it shows here. It's all these technologies, and they're all themes, they're emerging themes. You've got, of course, blockchain, which has been around. It really depends upon what is your view on blockchain. But we've got artificial intelligence, we've got predictive services, we've got RPA, robotic process automation, which is being used certainly for asset services companies to automate and really increase dramatically the operational efficiency. There's lots going on. And in the heart of this is what I call the advanced data ecosystem, which basically looks at all these themes and how do they relate to an operating model for an asset manager, and the asset manager that interacts with various stakeholders, right? Whether it's the custodial bank that does more of the back office services, but also looking at partnering with fintech companies, partnering with thought leaders, and making sense of it all. So I think this is kind of like the complex view, and the next slide is the easy view. It's the non-technical view. It's kind of forget about all the detail. What is it about? It's about unlocking the value of data. And there are terabytes of data out there, right? So we can talk about structured data, so all the investment data, the various books of records, but also there's lots of unstructured data out there. So we're talking about big data. So it's all about making sure that we understand that data and that we manage that data correctly. And I think here it's where you can be a non-technical user of data and you can have a lot of great outcomes that you can focus on already. But there needs to be a data transformation program happening. So what I can tell you that at RBC we've been working over the last 3 years on a big project which was looking at simplifying our infrastructure, focusing on our clients and on building client portals, and most importantly looking at what is at the heart of all of this is data, so data transformation program. And this requires a lot of investment. They are big projects that are often running over multiple years, that are consuming a lot of resources, that are go over budget, and there's a huge execution risk. So I've been close to many of these big programs in my career, and it's challenging. So I think it's about being able to innovate and accelerate these kind of strategies. And what you can see here is what do you want to do with data? You want to discover data, you want to understand data, you want to have secure access to data, right? So looking at new ways of accessing data, APIs, then you want to analyze data. It's all about using tools to analyze the data. I would say data without an analytics capability is like the internet without a search engine, right? So data on its own doesn't hold a lot of value. It's the analysis of the data and the information and the insights you gain from that data that is valuable. And what is important, and we'll look into that a little bit later, is some of the outcomes that you can focus on, some of the key questions or key problems that you want to solve. And I think the last 3 things I just quickly wanted to touch on is aggregation, innovation, and enhancement. So aggregating is all about big data. So I think in the fund industry, we're not really there yet in terms of big data. So it's more smart data or medium-sized data. But of course, we will go into the big data space where we're looking at joining all the different data sets that are available, and being able to analyze this with new technologies like artificial intelligence, natural language processing. There's a whole host of different technologies that can be used to look at big data, and then ultimately to innovate and enhance. So to drive more value out of data, to become a data-driven organization, and to become an insights-driven organization. Essentially, we will, as I said, we will go a little bit into some further detail there in terms of how we see what are the different use cases and business outcomes that we have been looking at. So that's in a nutshell, topic of data at RBC.
Thanks, Frank. Well, for Simon, the question is pretty much the same, taking into account that we do expect that, well, it would be interesting to understand how data strategy, do affect your investment decision, as you are representing, of course, an asset manager.
No, we are bottom-up fundamental equity managers at RBC. Most of our strategies are looking to outperform benchmarks by gaining an edge, by understanding businesses better. But I think as an industry, the asset management industry, we have done a really poor job of embracing the data revolution. We are really still operating independently from each other. And we're operating very much like a sort of artisan, sewing a garment together by hand, really, when there are perhaps other ways of making things better. And I think as asset managers, we need to think about really 3 areas where the data revolution is going to impact us if it has not already started impacting us. And I think for us, firstly, we need to think about the companies that we invest in, the companies we invest our clients' capital in. And pretty much every company that we look at has some exposure to data. And this can be an opportunity for that business, but it can also be a risk. It can be a threat to that particular business. And how these are managed, how they are exploited for good or for bad, are really, really important to a business. And I think we're just at the start of really understanding how people engage with companies and how companies engage with people with these huge amounts of data that are being thrown off. And I think a really good example, one a company that we invest in and one a company that we don't invest in, and I think it illustrates nicely the risks and the opportunities. First company is United Health. It's a US health insurance company, and it's one of the biggest companies in the world now, as there is that big gap in the provision of healthcare in the US. United Health writes lots and lots of insurance policies throughout the entire United States. And they get lots of data back when people make claims on healthcare. And so they can really understand what's going on to the health of the United States. And that means that you can pinpoint more accurately treatment, or perhaps more importantly, you can be ahead of that. And you can say that in this little corner of Texas, people are 20% more likely to have heart disease, for example. And you can target that and try and work on programs to make people healthier. And this has 2 benefits. It has a benefit for society, because society is getting healthier as a result. But it also has a benefit for the business, because when they write their insurance premiums, they can be more accurate in how they price those dependent on areas. So we think that's a really good way of using data, and United Health has an advantage there, and we actually hold that business, if for full disclosure. Compare that to a company that we have always been very careful and hesitant about, and that's Facebook. And the entire business model of Facebook is based on taking your data, repackaging it, and selling it to the person that gives you the most money for it. It's also based on that adrenaline or dopamine hit you get when you get your like from it, or your unlike. I don't use Facebook, but I kind of know how it works. And for us, that is not a good use of data. One, because it creates tension, and societally it's not particularly good, and it's also making people go into silos. You only listen to people that say the things you want them to say, and so we're all getting broken up into bits rather than this being this great sharing of information. And secondly, sooner or later, as we saw last year, people are going to say, hang on, I don't want my data being used in this way. And that's not being priced into that company at the time, and it's a huge risk. And we've always been very hesitant of Facebook because of that very reason. So we need to really think about that when we're looking at the businesses that we invest in. Second challenge, I think, for us is how do we use tools, use the vast amounts of processing power available to better understand businesses when we are analyzing them? Because if you really think about it, traditional financial analysis, looking at the balance sheet and the classic accounting, that hasn't changed for hundreds of years. It's the same way of looking at a business. But if you think about it, studies say, if you take the S&P 500, about 70% of the value of the companies on the S&P are in intangible assets. These are the things that accountancy has not worked out a way of measuring. There's no financial metric for that. So most of the stock market is actually in things that accountants can't measure. They can't write in a column and write in another column and offset them. So you need a different way of looking at companies. And perhaps you need to start using different tools instead of the traditional take all the data, throw it into a spreadsheet, put it into Excel, and you get your number out in the bottom. let's start thinking about things that are going to tell us what a business will look like in the future, not what it looks like today or what it looked like a year ago. And it's something that we've started experimenting with at RBC, and we've got a couple, again, as Frank said, young, sort of smart, very data-aware people, and they're using programming languages such as Python, if you've come across that, to look at. You can do web scraping, scrape the internet, you can use natural language processing, and you can start looking for different things in businesses. You can program it to look for reputational issues, people saying bad things about a company or its products, or good things about a company and its products. And these are the sorts of tools we may need to use in the future to better understand businesses. And I know the topic of this conference is ESG investing. And I think it sits very well within that, because ESG is really trying to look at the things in a business that are financially or will be financially material in the future, but aren't financially recognizable today. And if we can develop those tools to find out what those risks and opportunities are, we will find out more about a business, and we can value it and understand it better where it will be in the future. I think the third thing comes back to this concept of disruption. And I think in asset management, we have already been disrupted. As an active asset manager, we've seen huge flows of money into passive products, smart beta, algorithmic trading strategies, all those sorts of things. And that's probably the right decision, because active managers overall have done a very bad job over time. We've not outperformed our benchmarks. We've not given our clients what we promised them. And naturally, money has flowed to those areas. But for us, and this is something we wholeheartedly believe in at RBC, is there's some things you can't get a computer to do. If you want to analyze the stock market and say, I want every company with a PE below 15, you can tell a computer to do that, and it's easy, and you get your list. You cannot tell a computer, find me a company with a great culture. Find me a company that's able to innovate consistently to stay ahead of its peers. It's really hard to tell a computer to do that. Even the best artificial intelligence AI programming can't find you that. There's still some things, thankfully, that us as human beings have to do. We have to take multiple data sources and make judgments ourselves. So I think it's right that there is disruption in our industry from things that computers can do better and, of course, cheaper. But I think there's also a place for active management. But we need to be using some of those tools to better understand our businesses.
Thank you, Simon. So I think that, we briefly touched the overall topic of client experience. So we are now talking in front of an audience which are people probably working within the asset management industry, but we are all also investors. So from a wider client perspective, and client experience, I mean, how data can improve this client experience? Maybe Frank, let's start with you.
Yeah. So no, thanks. So I agree with what Simon said. Simon gives a nice view on the topic of data from an investment perspective. I think as asset servicers, we sit on a lot of data. We actually have a goldmine of data at our fingertips, which includes portfolio data, which includes operational data, which includes data on foreign exchange, on all kinds of different activities. And so when talking to clients globally and asking them what is their biggest challenge that they're currently facing when talking to them about data, most of them would say, the fact is that I don't have one single source of truth of data. Right? Data is disjointed. It's sitting in various legacy systems. It's not interacting with one another. It's not talking to one another. So it's siloed, and this is a massive challenge in the industry. And I think I touched upon it before. Creating a central data repository is a massive task to do. Many people have tried. Most have failed. Right. So I would say this for me is kind of the prerequisite. Is when you're starting to talk about seeing data as a strategic asset to either make better investment decisions or increase operational efficiency or just make sure that we create better product for our clients, understanding our clients better. I think this is one area where the funds industry has been relatively poor, so to speak. Certainly when we're looking at retail investors, do we actually know who's investing into our funds? Or do we actually know who's not investing? and what is the missed opportunity there, right? So I think looking at different data sets, so that can be also distribution information, and it can be augmented with additional pieces of information. So to use data to get better insight into the overall business. So I think what I want to show in terms of some of these outcomes or different business outcomes that we can focus on to increase client experience is what I want to show on this slide. So we call this the advanced data strategy. So on the left-hand side, you can see what we call the enabling activities that are required. We talk about the platform, right? So you need to have a data platform. You need to have the technology. You need to have an analytics capability on top of your platform. This platform should include all your books of record. So starting from the investment book of record, but then also looking at accounting book of record, looking at your custody book of record, looking at operational information, anything that can help to enrich the data experience. So these fundamentals must be in place, right? So that's your platform, that's your technology. Then it's about insights. It's about gaining new insights from this data, right? And you can see on the right-hand side, you see a number of business outcomes. One of them is investment analytics, and Simon's talked a lot about doing fundamental analysis in terms of stock picking and also looking at new areas like ESG, where we can use some new technologies to get better insights into these areas. But there are other areas as well: distribution analytics, operational alpha, enhancing client service, management oversight, and regulatory. So all of these are areas that at RBC we have identified opportunities to work with our clients, to help them via understanding what are the problems they want to solve. And I think it's not only the what are we doing, it's mostly the how are we doing it. It's how do you work together with a client, ask all the right questions to understand what is ultimately the value that you want to create. And it is this very clear focus on what value and what outcome do you want to have that will bring you to success. So the largest successes we've seen is working closely with clients and working in small team in an agile way and having cross-functional teams with data analysts, with a client inside the room, having direct feedback on things that you're building. And you don't always have to succeed. You can also fail. But if you fail, you have to fail fast and move on, learn from it. So it's this iterative process that has been, I would say, very, very refreshing approach of working with clients and driving all these benefits. So a couple of examples. So one area, and it can be very simple, is there's a lot of reporting happening across the industry, right? So we're talking PDFs, 10,000s of PDFs every day pushed out through batch reporting. Who's looking at it, right? Why are these PDFs there? Or looking at tons of CSV files that are feeding different systems, that are very heavy to maintain, that need to have BRDs, etc. So the question here is looking at all of this and say, this is an area that can be improved, right? So asking the questions, why do you need to do this report? What do you do with this report? What's the business outcome with this report? Can't we do something else? For example, APIs, right? API is the way how the digital economy connects, right? So everything in the digital economy is based on APIs. You can call data. It's all very flexible. And you don't have any of that burden in terms of the legacy reporting that's going on. So this is one area that we've been looking in with our clients in terms of simplifying all the reporting and data flows that are going on. And it's really amazing how far you can go. A next step is basically looking at data visualization techniques. Just take data sets. You can use Excel, right, to analyze data. That has been around for decades, right? The idea now is to use some very nice intuitive tooling to visualize data and to cut out the noise and really focus directly on what is the information that I want to get. And there are some good techniques there that we've been using, and it's been very, very successful. And it's also very fast to market. So it's really the whole idea is that you go speak to a client on a Wednesday, you understand what the problem is, you start coding on a Thursday, you come up with basically already an MVP, a minimum viable product, or let's say first prototype on the Friday, and you present it back to the client on a Monday, right? That's really powerful. So these are some of the things that we see happening. So I would say there's lots to talk about. I think one area is the accelerated data strategy. So I think what is important is when you're looking at, you need to do something with data, you need to change, you need to go on a data transformation program. How can you focus on showing to your executives or to your management that this is the right strategy? How can you make sure that you continue to have the budget to execute on your program? And this is by going step by step and by showing value along all the way. So I think that is the key thing, is you need to know who, for the person that holds the finger on the budget, is to show them the value of what you're doing, right? And I think this is where one area that I want to talk about is partnership comes into play. So you can't do it all by yourself. I mean, maybe the very, very big asset managers, they will have lots of investment money and they will try to do things themselves. But I think the key thing here is to partner with the right companies, to partner with thought leadership players, to partner with fintechs, and also to work together collaboratively. And I think that's one of the key things in order to make sure that this is the whole digital and data transformation can be successful. Go ahead.
I mean, Frank and I were talking about reporting earlier, and I think it's so important to get that right for our clients. And if you think, we're all today, we're at a trade fair. If we were at a car fair, out there you would see a lot of cars with the hood up and shiny, and you can't see what we do. I didn't see any assets being managed out there today. It's very, very difficult to see what we do. So, I mean, your report that you hold, I think, as a client is absolutely critical. It's our shop window to you as investors. And I think that's changing rapidly from the traditional styles that Frank was talking about. And certainly when we engage with our client base now, and I think a lot of this is to do with the generational change, shift to younger people, millennials. People want to know much more about what we're doing with their money, not just how has it done, how's the performance been, what are we doing? And now we want much more explanation on why are you holding the companies that you are holding, and also why are you not holding maybe some others. We get lots of requests now for things such as carbon exposure. What's the carbon footprint, the carbon exposure of my portfolio? Because it's really important to me. I don't want to contribute to raising CO2 levels in the atmosphere. Similarly, what's my ESG rating? How do I compare? Can I be comfortable that you're investing my money in a responsible manner? And one of the things that we're looking at is mapping what we hold and reporting it to our clients in alignment with the United Nations Sustainable Development Goals. And it's been a bit of a challenge for us. Some of them apply, some of them clearly don't apply to asset management. But people are wanting that data. And then on the performance side, it's no longer acceptable just to give a return or maybe a very simple Brinson attribution. People want to know much more, where have my returns come from? And as active managers, we are we are expecting our returns to come from the companies we hold. Whereas if all of our returns were coming from timing the market or from riding a factor wave, being very overweight value or momentum or growth, we're not doing what we said we would do. So now we're finding that clients are asking us for factor attribution as well, break down where those returns have come from, not simple sector or country, which doesn't really tell you a lot about how your portfolio's performed. So I think, again, as an industry, as asset managers, we've got a lot of work to do to get our reports into a shape that are meeting the demands of our client base going into the future.
Thank you very much. So we got 15 minutes left. So I would ask just one additional question, then I would open up for question from the audience. And I'm asking this question simply because I had this question from an Italian asset manager recently with Frank during a meeting. It's mainly about confidentiality and privacy. So, I mean, we are talking about data sharing. So there are now regulations which are protecting, as we all know, I'm thinking about GDPR, privacy and confidentiality. So how, and this is for both of you, how do you ensure, that we are in a position to prevent any breach in terms of confidentiality and privacy? Up to you, I mean, Simon and Fred.
Well, yeah, you're absolutely right. I mean, it's critical. And again, look at it through the lens of companies that we look at. You see the example of Marriott, which was, I think, last year, 500 million customer records potentially stolen, which is huge. I mean, it's a huge number. And so we have to be very understanding of businesses and how they manage their data, because it's an incredibly big risk for them. And similarly, we have to think about that with our clients and how we handle them. I think it's not just a question of having policies and having systems in place. It's also a question of culture, because you can't have a policy for every single eventuality. You need a strong culture where people are motivated and mandated to take those decisions that protect their customers' best needs. And I think that's far more important than having a big policy manual that nobody's ever read. You need a culture which places that at the very front of your organization. And certainly that's something I think that RBC is very, very conscious of. And as investors, it's something that we spend a lot of time looking at when we talk to the businesses that we might invest our clients' capital in.
Yeah, I agree. I think what we can see is that people these days want to know what's happening with their data. They want to know where their data is, what it's being used for. And certainly this has come now with the GDPR. And I think GDPR is something that was basically designed by the regulator for the Facebooks, for the Amazons, for the big guys. But now, of course, it's something that we in the asset management world also have to deal with. So I think it is all about making your investor community understand is what data do you hold and why do you need this data. So if you use the data for the right outcomes, if you use the data to enhance your client's experience, to give better product to your clients, then I'm sure nobody will have a problem with that, right? But of course, I mean, data protection is the cornerstone of our industry, right? So if you're looking, for example, at information about investors in funds, all of that is confidential data. That data is housed with the transfer agent or the distributor. For example, in a country like Luxembourg, where you've got banking secrecy, there are very strict rules around safeguarding that data. And of course, that's our job, to safeguard that data. But it doesn't mean that we cannot start to also analyze that data. And certainly if you anonymize the data, if you make sure that the data is on a no-names basis, you can start to look at macro or at aggregated level of that data and understand what are the trends in distribution, right? Where are my funds selling and in which markets are performing better? And for example, which distributors perform better than others. So there's a lot of information I think that you can get from data while sticking to the rules and making sure that it's protected, segregated, and based on very strict data protection protocols.
Thank you very much. So I would take the last 10 minutes, to open up for questions from the audience. This can be done in Italian or in English, that's not a problem. Do you have any question?
I have one question. Sorry, I have one question about client data. So, first of all, do you have access to specific client data, such as their investing habits and so on and so forth? And do you think you can use that data to improve, for example, how you target the specific products for the specific clients? So this is more general, besides the market data, and focused more on the client side. Thanks.
But as an asset manager, generally we are operating in the institutional world. So our clients are bigger, but there's less of them. And where they then engage in the more broad retail market, we don't really have access to that particular data, so we would need to go to our providers. But certainly we would be foolish if we didn't use what data we have to analyze trends in marketplaces. But it's for us as a manager of assets, we don't really have access so much to that granular underlying data of where those flows are coming from. And quite often we will receive inflows and we have no visibility on them, really, which sometimes it would be nice to know who is it actually invested in your strategy, one from a point of view of interest, but also from a point of providing that service to those particular clients. So I'm sorry, that's not a very helpful answer, but it's the reality of our world.
No, I would agree, and I think the investment management industry needs to connect better with its client base. And I think we probably can learn from other industries. If you're looking at an organization like Amazon, for example, they have got so much information on their clients, and it's their business to know who their clients are, what their needs are, so they are mining all this data. If we would have a similar level of data for in an investment management industry, that would be a game changer, right? So I think the risk here is that you could have somebody like an Amazon enter in the fund space, and they've got this massive database, and they've got this massive distribution channel already in place, right? They know their clients, they know what they want, and they would buy the Amazon fund, right? So I think for me, it's one of those areas that we need to get better. And I think the tools are there, the data is there, but not fully yet. And of course, there are also data restrictions around that. But I do think there's a lot of opportunity there in this particular area and if we don't do it, somebody else will and disrupt this space. And then some people say like, when Amazon comes in, obviously they can tap into the millennial base. They can have real reach, and there's only a question of time that could happen. And some people are, there's mixed opinions around that. But I definitely think we need to look into that for sure.
Actually, Amazon polled. They did a survey of their customers and said, if we became a bank, would you bank with us? And the results were amazing. I mean, it's really, really high percentage of people said, yes, we would, because Amazon has that trust, and it's invested so much in its technology that most customers come away from Amazon saying, yeah, that was a great experience. And if they can translate that into financial services, I would say if you're a commercial bank, then that would be a real threat to your business, categorically. And then logically, they would move into other areas as well, higher fee areas, if that was successful.
It's not really a question, it's just thinking. Do you think that right now fintech is very fancy, the word fintech, but then the industry that you're working in, sometimes it's made out of people which are very in a suit and how can you talk to these people? Like you said, millennials, you think also the generation who now is managing the companies in a completely different world. And what I think banks or asset managers are trying to sell is trust. And trust is, you have to build trust, and the banks right now, they don't have a lot of trust. And the point is, how do you manage that people who ruined this trust, those people have to rebuild the trust, but you're not changing the generation of those managers. I mean, I'm talking about top managers right now on banks. I think it's just like a huge gap between all this. I don't think that like the private wealth manager that maybe works with 30 years in the industry, that maybe can talk to somebody who has like an education, like the education that is like startups and fintech, they just don't speak to each other, I think.
Yeah, yes, I couldn't agree more. And people when they look at companies and they think of mining companies and tobacco and all of these bad areas, us as financial services, we've done a really bad job. And as you say, that trust has been broken. And how do you rebuild that? I think you rebuild it by giving your customers what they want, delighting your customers. As we say, why is Amazon so successful? Because it gives people what they want and they come back for more. And we need to start thinking about that. And you're already seeing that, and you can see there's really big problems at the wealth management divisions of many of the big traditional banks in Europe particularly, and in the asset management industry overall. But our belief is there will always be a segment of the market that does want to pay for advice, but you have to give value for money. And value for money is no longer just performance. It is no longer the sober man in the suit. It's many different things now. It is, what are we doing with your money? How are we meeting your needs? How can we tailor portfolios to meet your particular requirements? So you're absolutely right. We have got a lot of work to do to reflect the generational change. And we spend a long time. It's critical that we have younger people on our investment team, because if you think of data, and we're talking about selling repackaging data, for many younger people they're not worried about that. It's just the way you engage with the world. It's part of the contract. You use this technology for free, you pay with your data, and that's just the way it is. Now maybe as they get older and they have a family and more assets, they might get more worried about their data being used everywhere, but maybe not. And so we have to really think about that. So yes, you're absolutely right.
I would even say, is Alexa going to be the new fund manager? Is that the fund manager of the future, right? Because I had somebody, a young person, tell me he'd rather go see his dentist than speak to his financial advisor. Right? That should tell you something. So the guy with the suit sitting there and trying to sell a fund, there's just a whole part of the population that doesn't even want to go there. Right, so I think it's about if there would be the Amazon fund and there's just a robot speaking to you via your smartphone, you can capture a lot of the market. And I definitely think that the established asset management industry has to look into that, because that's the big threat that's looming.
Any other question? Qualche altra domanda?
I'm the one. My name is Alessandro, and Riccardo has already pointed this question earlier, but it's this, the data, the control, the working on the data. How could you explain to an investor in 3 commercial words his advantage of having your bank and trust? You know what I mean? Just 3 words to say, okay, from the perspective of the customer, not of the asset management. Where is the money for him? The money just to say something. The commercial power, the grip on him.
I think the 3 words you'd have to use is value for money. You'd have to prove that you provide value for money, and value means different things to different people. So we have to understand what that value is. As I say, it could be an ethical requirement. It could simply be performance. It could be very, very low fees. It's many different things. But if we're not providing value for money, then we don't have a right to exist. We shouldn't have a societal right to do what we do. But value is a subjective thing, and it's different for different people. I could probably do a better job if you gave me a week to think of an answer there.
Diciamo che magari intervengo anch'io in italiano, che è più semplice. Allora, io come Frank lavoro nella parte di asset servicing, quindi servizi di supporto agli asset manager. E la nostra è un'industria abbastanza concentrata, con margini relativamente bassi. Noi viviamo sulle masse, non a caso uno dei ratio del nostro business sono gli asset under custody. Quindi alcune delle attività core, custody, fund administration, sono sempre di più delle commodity. Quindi da un lato sicuramente c'è un interesse a spingere su quello che può essere la parte dati, e al nostro interno per esempio esiste una linea di prodotto dedicata a questa, ma abbiamo anche un po' cambiato il modo di pensare, nel senso che per esempio uno dei servizi che noi offriamo è il cosiddetto registro partecipanti, quindi noi abbiamo evidenza di tutti quelli che sono i sottoscrittori dei fondi, per esempio di RBC Global Asset Management, e ci rendiamo conto che avendo dei dati, pur mantenendoli in via confidenziale, ci permette di avere informazioni sull'età dei sottoscrittori, sul sesso, sulla geografia, e queste sono informazioni che possono dare un grande vantaggio, per esempio alla funzione marketing di un distributore, per quello che possono essere le politiche di marketing. Quindi sono elementi, diciamo, nuovi, insomma, che forse un tempo non venivano neanche considerati, no? Quindi effettivamente noi facevamo custodia, facevamo calcolo NAV, facevamo registro partecipanti, quindi è effettivamente un mondo che sta cambiando. Noi ci rendiamo conto che se non stiamo dietro a questo mondo probabilmente le cose possono andare meno bene, ma dall'altro lato ci sono delle nuove richieste, delle nuove esigenze che prima non c'erano, probabilmente grazie anche ai millennial o a nuove tipologie di modi di pensare, diciamo. Sorry for the Italian, guys.
No, it's a question, Riccardo. Question.
A very quick one. Question for both. You mentioned a change in the culture of the company, in the way you carry out your projects. For instance, Frank, you spoke about agile methodology, and Simon, you mentioned the fact that you utilize the data, but at the same time, the judgment is very important. How this has changed the way you recruit new people? I'm thinking more about the soft skills, because of course we mentioned Python. There are some technical skills that of course are necessary if you want to deal with the data. I was wondering how the new hires are different or a bit better, how your company have changed the hiring process, maybe more in relation to the soft skills. Thank you.
I think traditionally, if you look at the asset management world, it's full of accountants, generally, and a lot of people have come from accountancy background, and maybe law as well. But I think we need to start thinking more broadly, people with different skill sets, and it does come back to what I said, the analysis of companies is no longer simply being able to spot the one wrong number in a balance sheet, or there's no advantage to that anymore. This is a commodity, and it's instantaneous. So you need people that can think about things in a different way. And I also think what we have to do is be better at bringing people in with experience of the industries that they are investing money in. So a lot of our analysts have worked in those particular industries, because it's all about knowing what you're looking for, not having a number and saying that fits my preconditioned thesis. It's saying, right, what are we looking for? We're looking for companies that are doing things differently. They're doing them better, and they're doing that because they've got a great culture, because they're looking to the future, because they're not just thinking about short-term financial metrics, they're thinking about long-term. They think about their employees. Do they look after their employees and pay them? Do they think about their reputation, society, in the society and the environment? Do they think about these broader things? And so we need people that have that mindset and are thinking about that too when they look at businesses. So you don't just need 10 accountants that have all got the same accountancy degree. I mean, it's still very important that you can look at accounts and know what it's doing. You need people with different and maybe more relevant skill sets, and certainly that's what we look for.
And just before I ask one question, when I said how many data scientists are in the room, there were 2 hands going up. So I think, like I said, in 5 years from now, I would like to see, I'm sure there will be many more hands going up. So it shows you the shift in the profile of the people that are working in this industry. So I would say people that are programmers, data scientists, data engineers, so very tech-driven people. That's really what the industry is looking for. And these people are in a very high demand. Right? So it's a very, very big challenge to recruit these people, and more so also to retain these people. So we at RBC, we have various innovation labs. We got in Toronto a large one. We got actually in Luxembourg innovation labs, and we have some of these people work there. But we can see turnover, right? So some people left to Seattle to work for AWS, Amazon. You know, so they're really, really young people that are very ambitious, and there's lots of opportunity out there. So I think getting for me, that is really the skill set that the industry is looking for. But we're not the only ones. We have to compete with the big tech firms.
But I would say once you've got that data, you've got that information, you still need to do something with it. So you still need people that understand what it's telling you and maybe what it's not telling you, and be able to analyze that as well. So I think the two work hand in hand. New ways of finding data, different ways of analyzing that data.
That's why guys like you and me are still around.
I just have a question. My name is Kingsley. And so like you were just saying, so why would a young person want to work for RBC, for example, RBS, sorry, considering the fact that Amazon or Google will be moving to the industry in a very short space of time? So how would you convince a young person with a lot of skills to come into this kind of industry you guys are in?
Well, we don't know, do we? We don't know if Amazon is going to enter the space. I think, I mean, when I look at Amazon, they are hugely successful. They make so much money. Jeff Bezos is the richest guy on the planet, right? Would he now at this point decide to enter into the asset management space, which is, as we all know, also quite inefficient, very heavily regulated, and actually, quite frankly, low margins business? So that's a question, right? Probably at some point, yes, but or maybe not. So nobody knows, right? But I would say that I mean, what I tell our teams is that, I mean, I personally would be very excited to work in a big bank or in a big asset management firm, because there is lots of opportunities there to use those skill sets and to work together with people that know the business, right? So you're looking at young guys that come out of school, that have studied IT or are data scientists or they're engineers. They know nothing about the funds business, but that's not a problem at all. Right? Because there's established people there who know how the business works, but they need to have that young talent to work with, to challenge things, to challenge the status quo, to look at things from new perspectives, and that's really healthy, and that's how from within you can start to disrupt slowly, right? The big disruption, however, is going to come if there's an external guy coming, like an Amazon, or the Google fund or whatever, you know. But so yeah, up until now hasn't happened. If it will happen, it's going to be a game changer. And maybe it's even going to be game over and we'll pack our bags and go home. We don't know, right?
It's a different business, but is it been very disruptive to see Apple entering the, let's say, the credit card business? You know, in the last presentation, they just entered like the credit card market. Have you seen it? I don't know if you're aware of it.
Well, I think if you look at from a company perspective, you've had Visa and MasterCard as the main providers, and that's you know, we look at those and they've done fantastically well, but again, they've done that by exploiting their duopoly position there, and we have felt for many years that is a market that should be disrupted. Really, why should you charge a shopkeeper 1% for doing something that's, you know, goes through a computer? It's not again, and that comes down to this whole idea of society giving businesses a license to operate. And once people realize the fees that are paid on this, they start saying, well, I don't think that's fair and that's right. And if somebody can come along and disrupt that, it's probably an industry that is ready or should have some element of disruption in there. So we would be more competition in that market. It's got to be a good thing for consumers and for businesses, particularly small businesses that really suffer from paying quite large charges on credit cards.
So if there are no more questions, thank you very much. Simon, thank you very much, Frank. Very much appreciated. Thanks to you for having participated to our conference.
Thank you.
Buona serata.
Thank you. Thank you very much.
Sull'importanza di incrementare la componente di investimento collegata al sistema paese e costruire un piano pensionistico complementare. Scopri tutte le conferenze del percorso P5, dedicato al sostegno all'economia reale e previdenza.